Thank you so much for joining me today. My name is Jay McGowan. I'm the Director of Financial Planning here at Five Plan Partners. And today I wanted to talk a little bit more specifically about a section of the CARES Act that relates to retirement plan distributions. Last week, I did a vlog on the CARES Act and how it affects individuals in general. Part of that is the retirement plan withdrawals or distributions, but I wanted to hit on that a little bit more specifically in this vlog. And so what is a coronavirus-related distribution? Congress in the CARES Act has come out and said that distributions from either IRAs or employer-sponsored retirement plans can be up to $100,000 for individuals who have been impacted by the coronavirus. And those are distributions that are made in 2020. If you've been diagnosed with COVID-19, your spouse or a dependent has been diagnosed with COVID-19, or if you have experienced adverse financial hardship due to COVID-19, then you are deemed to have been affected by the pandemic, and you can take a distribution up to $100,000 out of your IRA or qualified retirement accounts. The intent of Congress was to make this provision broadly available to the general public, and from our understanding, the IRS will follow suit when they look at this. So what is that? What are the benefits of a coronavirus-related distribution? So these distributions are exempt from the 10% penalty. So if you're under 59 and a half, typically you're penalized for taking a distribution early. That is waived for these distributions taken in 2020. A lot of times when you take eligible rollovers from employer-sponsored retirement plans, there is a mandatory 20% federal withholding that takes place. That is waived. And also one key provision is that these distributions are eligible to be paid back over a 3-year period, beginning the day after you receive your corona-related distribution. And it won't be considered a taxable event. It'll be considered a rollover. Your income, if you don't repay that, your income may be spread over 3 years. And by default, it's split evenly between 2020, 2021, and 2022. However, you can elect to include all of the income in your 2020 tax return. And if your income has been significantly affected this year by the coronavirus, and you have to take a distribution from your IRA that you're not planning on paying back, then it may be advantageous from a tax standpoint to actually claim all of that income as taxable income in 2020 when your other sources of income are down. So that's a planning topic that we can use as it relates to these coronavirus-related distributions. Another piece of that is loans from 401ks, 403bs, other employer-sponsored retirement plans. Typically, the loan that you were able to take from those plans has been the lesser of $50,000 or half of your vested account balance. Under the CARES Act, they have expanded that to $100,000 up to 100% of your vested account balance. So that's increased basically the loan amount from 50 to 100. And if you don't have that much in your account, basically you can take up to 100% of the value of the account instead of 50% as it was under the old laws. And so you can also delay any payment that would otherwise be owed on that plan loan from the date of the enactment through the end of 2020 can be actually delayed for up to 1 year. So this also, as I mentioned in the previous vlog, it waives the requirements for individuals to take required minimum distributions in 2020. This applies to traditional IRAs, SEP IRAs, simple IRAs, as well as 401ks, 403bs, and other governmental, 457 plans. It applies to both retirement account owners as well as beneficiaries taking stretch distributions. So if you have an inherited IRA, you are not required to take your, we call them Benny or inherited IRA required minimum distributions in 2020. So one other key provision of this is that the CARES Act not only eliminates RMDs for 2020, but any RMD that was needed to be taken in 2020. And so if you turned 70 and a half in 2019, you have until April 1st of 2020 to take your required minimum distribution for 2019. If you have not done that to this point, then you actually do not have to take that required minimum distribution for 2019 that you haven't paid. nor do you have to take your required minimum distribution that is related to 2020 that would have actually been due to pull out of your account by the end of this year. So in the first year, you have to take a required minimum distribution. You actually have until April 1st of the following year to take it, and then every subsequent year after that, you have until 12/31 of that year. And so if you needed to take an RMD in 2019 and that was your first year, you could have stretched that to April 1st. If you haven't taken that to this point and you're waiting to do it by April 1st, then you don't have to take that distribution. Voluntary distributions are still allowed, including the qualified charitable distribution. So you're still able to do QCDs and give directly to charity from your IRAs in 2020. If you've already taken a required minimum distribution in 2020, there are a couple different ways that you can correct this if you've taken it because you have to, but you don't necessarily need it. So if you have taken a withdrawal to satisfy your required minimum distribution within the last 60 days, you can actually write a check back to your retirement account and include it as a 60-day rollover. If it's been longer than 60 days since you've pulled your required minimum distribution out, you actually, if you have been affected by the coronavirus, you can put that money back in as a coronavirus-related distribution, and that will count as a rollover back into that plan, so you will not be taxed this year on that distribution. One key thing to note is that even though the coronavirus has not been an issue the entire year, the provisions apply to distributions that were taken as early as January 1, 2020. So if you took a withdrawal or a distribution out of your retirement accounts on January 1, even though the coronavirus hadn't affected us at that point, all these provisions apply to those distributions as well. If you have an inherited IRA and you are a beneficiary and you've already taken the distribution, this does not apply to you and you cannot actually put the money back into an inherited IRA. So if you have an inherited IRA and you have not already taken the required minimum distribution for 2020, then you're not required to take that because of the CARES Act. So as you can see, the CARES Act is a very in-depth piece of legislation that affects individuals, small businesses, and a lot of other areas of our life and our economy. Just like always, if you have any questions about how this or anything else that you've heard out there relates to your specific financial plan, please do not hesitate to reach out. We're always here to answer questions. If you know of anybody that has any of these questions, please feel free to give them our number, have them reach out to us, and we would love to build a financial blueprint for them and help them navigate this situation as well as others that they will face down the line. So thank you very much. Have a great day.